Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KNOWLES CORP quarterly report. Knowles Corporation offers a diverse range of products and services across various industries. The company's two main segments are Precision Devices, PD, and MedTech and Specialty Audio, MSA. Key businesses and services provided by Knowles include capacitors for power supplies and medical implants, RF filtering solutions for satellite communications and defense applications, balanced armature speakers for hearing health, audio, and true wireless stereo markets, microphones for medtech, audio, and other industries, products and services for the defense, medtech, electric vehicle, industrial, and communications markets. The significant increase in Knowles Corporation's stock price by over 101% in the past year can be attributed to several key factors. The company's strong financial performance, including robust quarterly earnings and revenue growth, has been a major contributor to its rising stock value. In Q3 2025, Knowles reported a 7% year-over-year increase in revenues from continuing operations, exceeding guidance, and provided an optimistic outlook for the future. The divestiture of its consumer MEMS microphone business also streamlined the company's focus and improved its financial profile, contributing to investor confidence. Additionally, Knowles' product innovation, such as the launch of new high-performance inductors, has expanded its portfolio of specialty electronic components and attracted positive attention from analysts. Several analyst firms have provided positive revisions for Knowles Corp, including upgrades from Wall Street Zen and Craig-Hallum. These factors collectively contributed to the significant increase in Knowles Corp's stock price, making it a notable performer in the market over the past year. The primary drivers of revenue growth and decline are multifaceted. On the growth side, increased bookings and backlog in the Precision Devices segment, higher demand in key markets such as defense, electrification, medtech, and industrial, and higher average pricing have contributed to revenue expansion. Additionally, increased shipping volumes of metal cans within the specialty audio market and customer prepayments have also boosted revenue. On the decline side, unfavorable product mix, lower than expected yields in CD business, and lower average pricing on mature products have hindered revenue growth. Furthermore, lower shipping volumes into the hearing health market have also contributed to revenue decline. Geographically, Asia has seen significant revenue growth, while Europe has experienced a decline. The United States has also seen growth, albeit at a slower rate than Asia. Net income and profit margins. A shift in favor of growth, the financial performance of a company has undergone significant changes between 2024 and 2025. Net income has increased substantially, with the 3 months ended September 30, 2025, showing a notable rise to $17.4 million from -$256.3 million in 2024. However, this growth was followed by a decline in the 9 months ended September 30, 2025, to $22.3 million. Profit margins have also experienced fluctuations. The gross profit margin increased from 44.1% in 2024 to 45.7% in 2025, but decreased slightly to 42.5%. Non-GAAP gross profit margin followed a similar trend, increasing to 46.2% before decreasing to 44.1%. The reasons behind these changes can be attributed to revenue growth of $10.4 million, 7.3%, driven by higher demand and average pricing in key markets. However, this growth was offset by an increase in cost of goods sold of $3.3 million, 4.2%, primarily due to higher shipping volumes, unfavorable product mix, and lower yields. Overall, the company's financial performance has shown a mixed trend, with net income and profit margins experiencing fluctuations. While revenue growth contributed positively, increased costs of goods sold had a negative impact on profit margins. The company's financial performance indicates a significant improvement in its operating cash flow. In contrast to the previous year's negative operating cash flow of $95 million, the current year has seen a substantial increase to $66.8 million. This shift towards positive operating cash flow is a positive indicator for the company's financial health and stability. The company's debt level and interest expenses have undergone significant changes. The total long-term debt decreased from $134 million to $104 million, indicating a reduction of $30 million. However, the current maturities of long-term debt show contradictory information, with an increase from $68.5 million to $72.3 million on page 3 and a decrease on page 14. Regarding interest expenses, there is a clear trend of decrease. The interest expense, net, decreased by -41% from $3.9 million in 2024 to $2.3 million in 2025. Additionally, the imputed interest expense on seller note decreased from $6 million in 2024 to $3.8 million in 2025. The only instance of an increase was a plus 93% jump from $3.9 million in 2024, 3 months ended, to $7.5 million in 2025, 9 months ended, but this is likely due to the change in reporting period rather than a genuine increase. Overall, the company's debt level has decreased, and interest expenses have significantly reduced, indicating improved financial health. The company's financial performance varied across different segments in the recent period. The CMM segment struggled, underperforming expectations. In contrast, the Precision Devices (PD) segment excelled, with notable improvements in revenue growth and earnings. Specifically, PD saw an 11.9% increase in revenues and a significant boost of $5.9 million in earnings from continuing operations before interest and income taxes. These positive results demonstrate the segment's resilience and ability to drive growth. Management is optimistic about the company's outlook, citing several key points. The adoption of new accounting standards will have a minimal impact on financial statements. The divestiture of CMM marks a significant step towards transforming Knowles into an industrial technology company. To achieve this goal, management aims to reduce operating expenses and gain market acceptance for new or enhanced products. The company expects to continue generating positive cash flow from operations, with sufficient resources allocated for working capital needs, capital expenditures, strategic investments, and share repurchases. Specifically, capital expenditures are projected to account for 4.6% of revenues in 2025. Overall, management's strategy is focused on driving growth through operational efficiency and product innovation. The company's financial activities include 2 key transactions: acquisitions and divestitures. Notably, there were no acquisitions mentioned in the summary. However, a significant divestiture occurred when certain assets and liabilities of the consumer MEMS microphones segment were sold to KNOWLES Corp for $150 million. Concerns about inventory buildup or supply chain disruption exist. Our financial summary reveals concerns regarding inventory buildup and supply chain disruption. Notably, inventory levels have increased by $5.1 million from December 31, 2024 to September 30, 2025. This rise in inventory is accompanied by risks associated with anticipating customer orders, as well as higher shipping volumes in certain markets. Furthermore, lower than expected yields in the CD business due to the introduction of a new specialty film product line have added to these concerns. These factors collectively suggest that our supply chain may be facing challenges, which could potentially disrupt operations and impact overall performance. That concludes the financial summary for KNOWLES CORP. Feel free to comment below, and I will be happy to answer them when possible.